Well, first and foremost, I mean, for Kenya to be a middle-income country and achieve its 2030 goals, it needs to have sustained 10% growth rate from 2012 onwards. While there's much positivity surrounding that report released by the World Bank yesterday, suggesting we're seeing 3.5% growth next year, we're still well off that mark. So do you see the country on track to meet its target for 2012?
Thank you very much, Alicia, for having me. If somebody would ask you or ask me, can Kenya reach 10% growth at some year, most people would respond yes, those who know the economy. If it was able to grow 7% in a year, which saw still lots of the infrastructure constraints, lots of the energy shortages, then it can grow higher. The problem is Kenya has never reached that growth for a longer sustained period, and the best period we had was these few years between 2004 and 2007. So there's still lots of headway to make to reach that potential. Kenya has the potential, but it has never reaped it, unfortunately.
Of course, a lot of this recovery and development has been riding on the government-sponsored stimulus plan. That in itself has seen quite a few delays, with a significant portion of a 22 billion shilling package to be dispersed. So, still, just how much of a challenge do you see that being?
This is a challenge. It's not just a challenge for Kenya, it's a challenge for most other developing countries and developed countries. The challenge with stimulus packages is you have a trade-off between spending on the key areas that stimulate growth, infrastructure in particular, but that takes time to procure and to implement. Or you do it in terms of tax cuts or other types of measures which you can do quickly but don't have the same impact. And that's trade-offs that other countries face too. So Kenya is not specific in that case. But the bigger issue is, I think, as you referred to in the first question and as you discussed yesterday, how do you get Kenya structurally back on the growth path? And this has a lot to do with infrastructure spending and with overcoming agriculture bottlenecks. That
is certainly an area that the World Bank has been concentrated on in the power arena specifically. We're looking at the World Bank investing quite a lot of funds in developing that power sector of the economy. Run us through some of the inroads that you're making there.
No, thank you for raising that. Let me say first about the broader role of the World Bank. The World Bank is a knowledge and a financing institution. And going forward, we want to combine those two strands of our strength, knowledge and financing, where Kenya seems to be the right country. And your program is an example of that knowledge dimension. On the specific portfolio, the World Bank has a $1.5 billion portfolio, out of which 2/3 is in infrastructure, including power. And our main emphasis has been on renewable energies, and we have quite a big project now with the government in the Nabasha area, Okarian, which is on geothermal, one of the biggest or the biggest in Africa. Having said that, it is important to note development partners and institutions like ours are working with partners, with the government in particular, to help get development off the ground. We are a small share of the budget. Partners altogether, of which the World Bank is the largest, have only 5% of the government's budget. So the key challenge is, how do you use our assistance to leverage yourself on a much larger scale into government programs and help our partners implement those? Especially
in a context where, looking at governance issues in the country, it's been red carded in terms of the World Bank actually, funding. I mean, it was committed to funding 89.4 billion shillings to Kenya, which has been withheld due to governance issues. Just how confident are you in the progress Kenya's coalition government is making in that regard, and some of the politically risky factors we still face moving forward?
Kenya has governance challenges, and nobody would dismiss them. All the key partners in government, those who want to make a difference, would admit them. The question is how, as a partner which has international partners and staff like myself and national partners, to make a difference. And we think the difference is not that you lecture at your client. The difference is to help core constituencies to drive reform forward. And then broadly, if you look Kenya compared to other African countries, there's some upside also in the governance arena in two areas. One is Kenya is a very open society and has a high transparency, and lots of the governance challenges get discovered. Secondly, and that refers to your specific question on the World Bank projects, the corruption was found by the government's own internal audit department, and we helped them find that. So discovering that in a very professional way and then having the government take the first key actions was already a step in the right direction.
So when investments get made and when monies finally get dispersed correctly, prevented not being withheld anymore, are you confident in these monies being directed and channeled to the right avenues where they will be making a difference to the man on the street?
Yes, I am. Otherwise, we wouldn't do it. We have quite stringent regulations and safeguards, and we have own units which just deal with what is called fiduciary risk to not using your money well. And when there are allegations that money is not being used for the intended purposes, then the mechanisms come in place that you just referred to.
Yep, let's take a look at this collaboration you've been speaking about. I mean, between government, the World Bank, and a private sector as well. I mean, looking at Kenya's competitiveness and how they need to be working, what potential are we looking at when it comes to Kenya's competitiveness moving beyond 2010?
Kenya has traditional strength in commodities like tea, coffee. Kenya is well known for that. But this is unlikely to be the growth path that would reach to the 2030 goals you referred to. So what are the other new areas? And I want to highlight one and then alert you to one important trend. The one area Kenya is strong, and we highlight that in our report, is services. Kenya has been traditionally known for tourism. That sector has rebounded but hasn't grown substantially or much more than it did in other similar countries over the last years, partly due to the political risks you referred to first. But then Kenya is, to some extent, regional, almost global market leader in some niches of IT, including mobile money. And that was one of the sectors that has seen rapid growth. 77% of Kenyans above the age of 15 now own a mobile phone. And it's possible that within the next 5 years, every Kenyan who wants to have a phone can have one. And for the Kenyans, it's not a luxury item to chat with your friend, but it's actually a development tool that can make a big impact. The bigger trend that's also important to note, and that's the same for all of Africa, Kenya is growing by 1 million person per year. Kenya is reaching or has reached already a 40 million people threshold. With its neighbors, it is much more than 100 million people of the EIC members. Some say this is a problem because you need to create jobs for these people, and that is an issue. But these people also create jobs. And so you get scalability and urbanization that you can have these service sectors then thrive.